All right, market selling off today, and these are the levels that I'm watching. If you're swing trading, these are the levels that you need to watch also, okay? Some levels you might not like. If you're an investor, you might not like these, but if you're swing trading, these are the levels you should be paying attention to. Most recent levels will be the most recent lows for last week, okay? You want to see the push down here, and you want to see buyers step up and start rebounding the market back over these highs right here. And once we break that high, that would signify that the market is trying to trend higher because we're putting in higher highs and you want to see some continuation back up to the top of the range. However, you shouldn't be looking at that right now. Okay, the market is very weak. We did gap down this morning. So the most high probability trade would be the test of this area right here if you're a bear. Okay, when we get to this area, this is going to be very important because if we flush, depending on how badly we flush, you want to see a retest and then a pushback lower because we could trade back down into the 160 moving average, which is trending. So technically, if you want to look at, if you want to see it on the bright side, that is an area of support that we could hold. And that's going to be somewhere down into the 670, maybe 660. Could we test 650? Those areas, it is possible because why? These are areas that we failed last year. We did break out of that area. We did break out of that area in April. So that area is somewhere down here. And could we test that level? So we could test that, but I'm not looking for a test of that area anytime soon because that would be sometime next month. So in the foreseeable, well, in the immediate future, you want to watch this level right here and what happens once we break. Because once we break, you want to look for a retest. But what I do think is going to happen, I'm not trying to predict market. What I do think is going to happen is we're going to get some kind of flush, take out liquidity, and then we push back higher. And once we push back higher, you might get some kind of move around here. And then once you start taking out these levels, then you're going to look for the move back up to the all-time highs. But until then, you need to be patient. These levels need to be watched and super extreme down here. If you're investing, you probably don't want to see the market push back down there unless you have a lot of money on the side that you want to put in the market and you're waiting for a pullback. If you don't have a lot of money, you're not watching the market. You're not hoping the market goes back down here. You're hoping the market push back higher. But we're not talking about long-term investing right now. We're talking about swing trading. Okay. So if you're swing trading, watch these levels, wait for maybe some kind of pullback, retest, and then the pushback higher. Until then, you probably should just sit on your hands. There's not much to do. Go down to the 4 hour. It's going to tell you the same thing. We are coming back down into the area, clear support. You want to see some kind of push down in there today and then a rejection and then a push back up, trending over aftermarket and then going into tomorrow. Even going into the weekend, if we can break above here tomorrow, that'll be a good sign, right? That'll be a good sign that the market does not want to break below this level. However, if we do break below that level, again, there's trouble. There's a lot of trouble. This is going to be what you should be watching for, the break and the retest back down into that area, 660, 675, somewhere around there. Okay. But anyways, let's move away from the Qs and let's move over here on the SPY. Not loving the way the SPY is looking. I haven't liked the SPY chart for the past months now. Okay. We basically been doing nothing, just trading in this area for weeks now, since last month. We did gap down today, so we broke support. And this is where the range is. We have a lot of downside. Just like the Qs, there is a lot of downside on the SPY. So this looks a little bit more bearish if you ask me than the Qs, right? Because there's a lot of like open runway back down into this area. At least you have some immediate support coming up on the Qs, but the SPY, this is mainly where we could push back down into. So I'm not looking to take any trade on the SPY right now unless it's a short trade. And if you go down into the 4 hour, it's the same thing, right? It doesn't look that good. I mean, it's just been sideways movement for the past few weeks now. So looking for a continuation trade is probably the best scenario on the SPY. But again, I'm not trading the index right now. I'm rather trade some individual stocks. So with that being said, let's move over here to like Amazon. Let's start on Amazon. And I think Amazon is suffering from the same thing Google and NVIDIA and Tesla, they're all suffering from this AI sell-off. Because look what's happening. We did have this area that we've been struggling. Basically, all the bigger name stocks, they've had the same issue. Push up into this resistance area that we can't break, sell off, push back up, retest, trade around. At least Amazon did break, then we back down, and then today we got this big gap down. Okay, this right here is a very key level. So if you're looking for long trades, there is no long trade until we break over, retest, and then a continuation for the highs. At this point, what you need to be paying attention to is the levels below, which is it'll be this one, and you have this gap right here that needs to be filled. That gap is about 214. So I mean, you want to wait for maybe some kind of retest of this area, but I do think if we do push back all the way down into that level, you're gonna get a flush because the gap is gonna close. This gap is gonna close. So Amazon is also bearish. You might want to stay away from it unless you're looking for a bearish trade, and that's just the daily. And I'm only referring to swing trading. I'm not talking about day trading or anything. NVIDIA. NVIDIA is the only one that's giving me a little bit of hope when it comes to tech, because this is what's happening on NVIDIA. Same thing as Amazon. We pushed up, failed. I mean, we pushed up twice, right? Push, sold off, pushed again, big sell-off. Push, sold off, push, fail. Until we break that level. Again, you're swing trading, you want to trade the break and the retest. Don't care about the breakout trades as a swing trader. If you focus on break and retest, you're going to be fine. You want to see the break and the retest and then the continuation. Okay? Until that happens, there is no trade over here on NVIDIA. Absolutely no trade. There is some good signs. The 20 is holding up as support. It is curling higher. 160 is down here, which was major support earlier. I guess earlier in the month. So those are good signs. Okay, earnings is coming up at the end of what is that, August. So that could play a part in the market, but I'm not too worried about NVIDIA right now. Within the next couple of weeks, it could do something like what happened over here in Apple. We did trade in this channel to the downside, and once we broke out above the channel, we just skyrocket all the way up to all-time highs. Look what happened. Broke out. Now we're retesting. You also have the 20 moving average curling higher. The only scary thing is that earnings pretty close. So I probably wouldn't take any trade right now just because it's so close to earnings. But this is a nice break and retest. You want to see the move to continue higher and then possibly retest the 334 area. Okay, that's a retest, break and the retest trade. It hasn't confirmed yet, but it is setting up. Let's keep it moving. Google is another scary one. All right, Google sold off into the 160 moving average, held support, pushed back higher. Again, the same thing as Amazon, NVIDIA. They're all doing the same thing. They have this area where they just refuse to break out of. Refuse to break out of. And what happened? We pushed up there last week, or yeah, at the beginning of this week or last week, and we just rejected. Today they came out with earnings, and even though I believe they beat on earnings, the stock is selling off. And guess what? There's a lot of downside. There's a gap to be filled right here. So I'm expecting this gap to fill about 308 to 304 area. And we might just test support at 300 or might go sub 300. I'm not 100% sure. I'm not predicting that we're going to go sub 300, but that's an area that you need to watch. To the very least, you need to watch this area. This is a 305 area. We need to see that area. We get some kind of support in here. And even if we test below, test that zone, you want to get some consolidation in the area and then a push back higher. You don't want to see something like this where the 160 start curling, because if it starts curling, then if we do get this push higher, then you're going to look for a trade back to the downside, because that would mean that Google is rolling over and things are looking bearish. If we do start pushing lower, there is so much downside trade that we have on Google, it's ridiculous. All right, 221, no, 271. That's an area to watch if we start trading lower. But I'm not looking that far into the future. I'm still just paying attention to what's going on in the immediate future, okay? And the immediate future tells me that we might test down here at 305, 306 before we get a bounce back higher, okay? Let's look at one stock that has been doing pretty decent, even though the market's been selling off, all right? And real estate sector is the sector because real estate has been just like grinding higher. And this is one, Realty Income. I mean, I called it over here. We did almost test the top of the range. What's happening right now is, or let's backtrack a little bit. Same thing as what's going on over there in Google, NVIDIA, um, all the tech stocks, all the bigger name stocks. There's the same thing going on over there. You had this area where we just pushed up in and we couldn't break. But once we get the break, you get the retest. Again, retest, break and retest if you're swing trading. It's very important. Get the retest. You have the 20 moving average confirming that the trend is changing. 20 moving average is above the 160, showing you that the trend is positive at the time. You get the retest of the prior resistance level, and then you get to move higher. We did push higher, sold off. Well, we are finding some support right here, and this could just be setting up for another leg higher back up into this area. Okay. If you're not in this trade, you already missed it. The trade was over here. Stop was down here. Your risk to reward should be up there. Okay. If you're not in it, I wouldn't take this trade right now. I mean, technically, you could say the break over that candle, you have your stop here, target the highs. Could be like a 1-to-1 trade or 1 to 1.3, 1.4, well, 1 to 1.2 to 1.3 trade. If you want to take that trade, I mean, fine. It's not the highest probability because you already missed this move. You should have been in somewhere down here. Again, stop should have been down there. If you get in here, I mean, it's a little bit more risky because we could get some kind of oscillating back down to the moving average. Probably stop you out before we move higher. So I would probably stay away from that. But it's just a trade that if you're not in it, just stay away from it. It already happened. It's already going. Okay. But I want to let's take a quick look at what's going on over here on oil. And oil's been moving higher, which is probably going to put some, well, not probably, it is going to put some fear in the market because the energy start trending higher. That just means that inflation risk is going to be getting higher, or it's going to be more concern with inflation. And with inflation comes interest rate and yada, yada, yada. Fed raising rates, keeping rates steady, all going to play into oil moving higher. What I do expect is maybe oil moving back up. I don't think oil should hit 100. However, we could test that level and then get some kind of sell-off. Keep an eye on oil because if oil continues to trend higher for the next couple of weeks, then that's gonna not be good for CPI in the next month or 2 months. Okay, just keep an eye on this. Oil has been looking good, so if you have been trading oil, I mean, congrats to you. If you haven't, then stay out of it. You already missed the move. Okay, but that with that being said, that's it for today. I don't be on here any longer. I just wanted to give some levels that I'm watching. Okay, peace.